So if you're a senior technical leader trying to ship AI, you're probably carrying the decision load for risk, vendor claims. Is this safe enough? That's how you become the permanent auditor, and the team learns to wait for you. In this episode, we're going to map the mechanics of auditability so that you can move faster without becoming the bottleneck. Now, today, I'm joined by Daniel Nikic, founder of Co Rez, who spent years pressure testing companies and AI claims through research and auditing. So welcome to the show, Daniel.
Thanks for having me, Mike.
Yeah, appreciate having you here. So before AI auditing, you were operating in environments where capital risk was real and assumptions got punished. What was breaking or getting exposed that taught you to distrust good stories and actually demand evidence instead?
I think it will have to go back when I finished university, because I finished university in 2009 and hence the financial crisis in 2008. And it showed it was tough to get a job during that time for those who remember, who got out of university or college. But I think the thing that I always liked about what I do, hence investment research and auditing data, is that I always liked research. It's a lot of things since I was a child. I liked watching sports and I'll be interested about learning about a certain athlete. And I started working in student jobs in accounting and in the tax analysis in Canada for Canadian Pacific Railway. And I saw how important it is to make sure the numbers or the information is correct. And then I worked in management consulting after university when I moved to Croatia from Canada. And when I was in management consulting, I had to do a lot of comparison. If you could back up what you're saying, then you're more confident and it's more convincing to the other person that you know what you're talking about. If I'm building a financial model, I have to back it up with the research. How's the market going? Why should we invest millions and millions of dollars in this project if the rents are not that high or the yields very high compared to being low, and if there's a huge vacancy? And I had to deal with a lot of primary research. And I learned that when you can back the sources that you're using and you came to a conclusion, it's easy to make a strategic decision and minimize the risk. I think it would also be, there's a large footprint, like a location that has a lot of people walking by it. There's a lot of offices and stuff. And it's, hey, we should build a shopping center nearby or another office building. But I know there's a huge vacancy in the other office buildings or nearby shopping mall. Then I'm okay. They're just going based on it.
When you were managing large projects though, what did risk management look like day to day? Not as a concept, but as a system. What did it look like for you?
There's a process. I think whoever I dealt with who was in management or investing or stocks, you have to have a process, how you come to a decision. So it's a step by step. Okay. We're interested in a certain, say for instance, for real estate development, we're interested in a certain location, do the research on the area. Is there potential there? And then you go step by step. And at the end of the day, it comes down to the people that you work with. If you're dealing with the other side, do you think you can negotiate with them on a certain price? Are they overvaluing their property or are they undervaluing it? So I would say you have to have a process. And I would go back to university, the tree diagram. Is this property good? Yes or no? Yes. Okay. Is this market growing or declining? Yes or no? It kind of goes down like that.
So where did that system fail under schedule pressure, for instance? Where did the failures come from?
I would say failures come down to communication, money, a lot of times. So at the end of the day, if you don't have the monies or that comes down to it, I think we all know this who's been an entrepreneur. If you haven't gotten screwed over or someone hasn't misled you or lied to you, you are beyond lucky. Because I know plenty of people who've been, let's just say politely, misled.
Oh yeah. I mean, that's a common issue these days too. People promise things and they're not even capable of delivering them in the first place. And it's just all a lie. So what's the most common lie that smart decision makers tell themselves when they want to move fast without proof?
I think they like to show power. Don't take no as the answer and always be like, yes, this can be solved without even processing the problem or the situation at hand. And I've seen that a lot of times, like, yes, you'll get this investment at this time and they don't have all the money to invest in a certain project. And I know this isn't nice to say, but do not be shocked. You have to
I
be open-minded to that, and that's business. And I think that's one thing that's not taught enough in universities. I did not know it until I got into the business world. How many people get misled or other words played. And you,
What was the biggest shock when you moved from traditional assets into tech and AI driven businesses?
I would say when I was working with traditional assets, I more thought a bit more of look at the numbers. 1 + 1 = 2. And then when you look at tech, it's like, what's the future value? Because if you asked me 15 years ago, Tesla is going to be worth more than Volkswagen, or Amazon's going to be the biggest company, Google, I'll be like, I don't know about their cash flow, finance, but they're investing in the future. And I would say with tech, you're investing in the idea. What are they innovating in a certain market? And a lot of times I look at if I'm going to invest in the company, say, even if it's stocks, let's just say, for example, research and development. That is so important. And is the company going to still be growing or a big player in the market in 5 to 10 years?
Was there anything that you had to unlearn about confidence as a decision signal? A lot of people, they feel like, okay, I have the confidence this is going to work. We can go make this decision. Was there anything you had to unlearn about that?
I think when investing in startups or tech companies, you have to focus on the management. The founder is very important if it's early stage because you can't really look at revenues. If you're investing in tech, you have to be like, okay, what's the burn rate? So those who don't know what burn rate, how much money are they losing each month or during a period of time? And I had to unlearn the kind of just not focus on the math, the finance. It's a huge important factor, but you have to look at other things. A person can have a company in Montreal. Another person can have a company in Jeddah. Another person has a company in Baku, Azerbaijan. You're all competitors. Like it or not, it's the globalized world you're dealing with tech. And that's one thing I was like, wow. In real estate hard assets, like, who's your neighbor or vicinity of 3 hours? Now there is no borders. That was a big for me because there's always a new company coming up. And I think with hard assets, it's very tough to compete with the big players. In tech, you have more of a chance of competing with the big players or growing much quicker. Now AI is a big word. And I remember looking into AI when I was working with investors in 2017, 18. There wasn't too much of a buzz about that. It was more of a blockchain and just data and SaaS. Now we're hearing about AI more. And what's next? Quantum possibly is wow. And that's, I think, in my opinion, AI is the biggest innovation since the internet, if not bigger.
LLMs and those kind of things. I think AI in a lot of instances has been around. It was just known as machine learning, the developer for 40 years. And we toyed with this kind of stuff back then, but I hear what you're saying. So it seems to me like you had a discipline for evidence and then you entered markets where velocity and storytelling, they outrun diligence like that. When did you realize that your approach to all of that had to be a system and not just like your own personal rigor?
When I was dealing with clients or investors, I have to minimize the risk if I'm going to keep it as a client. I would go through a process. You have a scorecard. Finance, it depends on the stage of company, management team, shareholders, legal, dude. There's so many aspects that you have to look into. The market, a lot of times will be what's the market size and growth. Sometimes I would work with investors. They're like, Daniel, it's a 1 billion plus market. Okay, we're interested. Even if they're an early stage investor or whatever, they're like, we have to get a return on investment. We don't think they're going to be the next Facebook or, oh, sorry, Meta or Qualcomm or whatever, or NVIDIA, but we know that we can get a return on investment. If it's 3x from 300% return or higher, we'll be satisfied and our shareholders will be satisfied or limited partners. I would always say, I think we should just double check because it could be something that doesn't pertain to the investor's investment thesis. You have to look at the overall picture. Is it going to help their portfolio to satisfy the current limited partners and or to obtain future stakeholders into the fund? Because it's a domino effect. It's like you're a public company. You always have to make sure the quarterly earnings are good and you're growing.
So what gap made you start Co Rez? Like what were clients getting wrong that wasn't being corrected by normal research?
how they would get their sources. Because we did a lot of primary research, and you can't just take secondary sources at face and be like, I'm just going to go with this source. It's right. You have to do compare it, because as in business, it's all transactional relationships, and you have to give them something if you want value from them. Another thing is I noticed that you can do the bot research, which is a lot of AI is doing, but what's the value? What's your experience and expertise from this research shows you? What trends do you come in? You have to always be thinking, being insightful. And that's one thing I think in research, a lot of people fail to do. If you're dealing with startups, try to be like, what is the startup trying to get? And what is the investor trying to get? And try to come to a conclusion, which is the best method.
So what did you decide you would not do that most firms default to?
I was surprised how many funds or companies don't do their own research. They just take it at face value. They're like, oh, I got this source. It's perfect. It doesn't matter. I don't need to go into more detail. And I think we see a lot of times, I'll take, for instance, startups. I have a great product. There's not much research. There's not many competitors. I'm like, wow, this is not appealing to potential investors because you don't know your market. And for investors, they're like, oh, we're going to invest in this company because this is the market. There's not much competition. And we think we get a return on investment because they're innovative. And it's like, hold on, you're just taking one source. You don't look at several other sources. I would use at least 5 sources, give them updates on the AI market weekly. And I have to back up why I came to a conclusion. And I would do 20 hours of just this type of research, and I have to explain 2 minutes on a Monday call. What's the takeaway? And I've been told, you're wasting my time. You're a nice guy. You have a nice voice, but I'm not interested. I want to know the takeaway. And they were right, because they always say time is money.
So true. We were talking about what you do that others, you just say you would not do that others default to. And like one of the things when I became a CTO, one of the things that I learned was to not be the guy looking over their shoulder and not be the one that they come to for everything. I even got chastised by our CEO once. We had a AT&T for our internet, and they were doing something out in the street and they cut off our internet, and they told me, we'll have it back up. It'll take 2 hours or less. I had a backup internet connection. I flipped it on. It was a little slower than the AT&T one. And he comes in my office and you don't seem stressed out about this. And I said, I am on the inside, but which would you rather I show confidence to the team that's out there or panic and make them panic? You could see the light bulb go off on his head. It's interesting when they're not in your role, what people think you should be doing until you tell them why you're not. But so you've analyzed like more than 15,000 companies. What patterns separate real capability from just good positioning?
I think when looking at a lot of companies, that what I've noticed is it goes back to the company being able to pivot in terms of change and being able to be innovative and growing. When you look at the largest companies today, say the Magna 7, and you look, those are all companies that are able to pivot. Good positioning in terms of overall, you have to understand you can't be content.
So when someone claims we use AI, what's the fastest way to find out if it's real or just marketing?
You have to look at the tech architecture. And sometimes they say they use AI, but it could be from a third party source, which I have nothing against, to be honest. And I think that's a good business decision because sometimes not everyone can be a telecommunications company, but they can use the telecommunication company's products and services to get a certain product or idea out. And I think a lot of times you can look at what patents they're using, because if they have an innovative AI, they usually will get a patent for copyrights. And I will say this very openly. I've seen a lot of companies, 0 revenue, but they have a great patent. And that's why certain investors invest in them. And they're like, Cisco's going to buy this patent of them. We'll get a return on investment. It's a nice safe bet. It's like putting money in a treasury bond. You can sleep at night.
So when you're auditing AI models, what are the first red flags that predict downstream harm or potentially failure?
I would say because AI models is based on the data or information it's used to train. And cybersecurity is important. And I'm not a cybersecurity expert, so I won't go too much into details in terms of cybersecurity. But in terms of data, which is my background, you have to look at the sources that they're using. Because I worked with a startup that was building its own AI model. And this is pre-COVID, pre-ChatGPT. This is like in 2017, 18. It is a lot of work just to get the data information. And I know that there was a lot of sleepless nights just to make sure a synonym is correct or that I understand certain data point. Oh, if this point is this, what does this equal? And I think AI models are very good if the data and information is used for it is proper and is trained properly. And you look at it, autonomous vehicles, they need 15 million data points to recognize just what is a tree. 15 million. And just imagine all the work that goes into making sure that AI model recognizes it.
Now I want to translate this into leadership leverage. So what can a CTO implement? If a CTO wants auditability without slowing down delivery to a crawl, what's the minimal operating system they should put in place?
I would say goes back to research. They have to have their own funnel just to make sure like to deliver the AI model to be trained properly. And they have to make sure that the cybersecurity is on par. And you have to keep on making sure that the results of the AI model is correct. And you have to have several use cases and you have to minimize the risk of releasing a product.
So what has to be defined explicitly? Decision rights, evaluation standards, or maybe escalation thresholds?
I would say the decision rights have to be validated. And I think a lot of times with AI, because it's based on the human that's developing it, you have to minimize the bias and you have to be careful with the copyright. The information that it's showing, is it legal to provide such information? We see a lot of issues with copyrights and we're in a world today, hence why lawyers get paid so much. You better make sure that you have the rights to promote or to release certain information.
So what do you think is the smallest team structure that you can get away with and still own all of that and all the decision rights and all that you mentioned?
I think it depends on what type of product you're building. To be very open, if you're building a simple AI model to solve like a easy to use problem, you probably don't need too many decision makers. But I think you could look at these big companies. They got thousands of individuals that are making sure that this sort of AI model is getting it right, from lawyers to data scientists to tech engineers to it could be marketing, etc., PR, because there's always these certain issues. So I think it just depends on what you're trying to build. But I think in today's world, we're going to see less and less bigger companies. Like we're probably going to see 3 to 5 people companies being valued at $10 million, just due to the fact of the emergence of AI to replace a lot of the bot work.
So before we continue, just want to tell the listeners that if you have nagging leadership questions that you want to get answered, there's a QR code on the screen. You click on that thing and it will take you to a form where you can fill that out. And potentially those will get answered in another episode. So back to what we're talking about here. How do you reconcile the speed of AI shipping with the slower pace of due diligence without outsourcing judgment entirely to the CTO?
I think it goes back to having a process. Like leadership has to make the final call because they're going to be responsible. They're going to be the ones that are going to deal with the legal issues. Being myself an entrepreneur and having employees and stuff like that, you are responsible for the success of the company. A CTO can't be a jack of all trades in a way. That's why you have a legal team or get a consulting or a other legal partner to help. The CTO is focused on the tech and making sure it operates and functions properly. And then they have someone to give them advice on the other aspect of the AI model to be efficient, to be released in the market. I think it's not fair that a CTO takes all the accountability for AI model when AI just the product is not the full company. That's how, unless they're trying to sell a widget, which still has value. There's companies that have a widget and they'd be able to be extremely successful.
Yeah, it's like I do NetSuite development with one of my companies. And for some reason, companies always put the finance team in charge of the implementation. And so what happens is you get basically a glorified QuickBooks if you're not careful. I find that interesting because if you put it into one person's world, they're going to shape it to fit their world. I think one of the things that a good CTO needs to always remember is not only does he need to let his team do his job, but he needs to reach out to other people on the management team, other executives, to find out how is this going to impact your department? Because when they forget to do that, things become a complete mess. What does a responsible AI adoption program look like when it's real and not just a slide deck?
I would say in terms of adopting AI into a company, you have to find a reason why to use it. Is it going to make it better for the company to use? If you're just saying you're using AI to sound like you're going with the trends or to sound innovative, but you don't really know how to use it, you're wasting money and time. And I think AI adoption has to be implemented that the client understands why it's being used and how it can help them to be more efficient.
So if there's a leader out there and they're evaluating AI vendors or internal builds, how do you prevent the organization from buying confidence instead of capability?
I think you have to do your research. It could be a startup and they can be a lot better, or a small team or a young team company that can really help this company have an AI adoption to their services and products. And they could be a lot cheaper than going with another company. So one way would be to do a pilot project or see use cases, check for testimonials, contact clients that they advertise, or if it's a really big investment to adopt this company's AI into your services and products, hire an expert who can do the due diligence to see if it's worth going with this company.
So what kind of proof should be mandatory before a pilot becomes production?
I think if a company's AI company has to show what they did, they'd be like, hey, we got this. Your company's dealing with, let's just say, patient care, healthcare. You have a doctor's office and we want to use voice tech to deal with patient care, that when your customers call, that you have a voice tech product that solves all their issues and it can direct them to who they need to talk to or to book a service. And you do tests, you could save so much money with using us instead of hiring a secretary or assistant that does this work, and they can focus on other aspects, or you can allow the current secretary or assistant to pivot their position to assist you in doing with other stuff so you can focus and have more time, more leisure time with your families or loved ones or friends, etc.
So what's a constraint that you'd enforce, even if it makes the sales cycle uncomfortable?
On a perspective of someone buying AR, I would say if they're going to buy, I would be like, you know what? Let's do a pilot project so I can feel confident, or do the research. If they're a big company, like, we want to do a pilot project, I want to know who your clients have been. Do your research, because it goes back to investing. Once you give someone your money, it's very hard to get it back or get a return. So you have to be sure about it. And if they're like, oh, we're going to adopt this AI, we're going to fire several employees, which is happening. And then later you're like, wow, we should have done that. Our clients are not happy. We're going to have big issues. We're going to lose customers. Financially, it's going to impact us greatly. I think sometimes it's good to do a pilot. And I hear from a lot of startups and companies that sell AI products, they always have to be like, hey, you can have a trial period, something like this. And you have to look at what's their customer support, because you're going to have issues most likely. So what if I don't understand? And how are they going to train you so you understand? Because there could be some issues. And we saw this when dealing with, how many times have people done with cloud? And I would think one thing that's very important that I think people who are adopting AI have to take into consideration is cybersecurity. Is it really going to make your company more efficient? If it's not, why waste your money? That's my opinion. If it's not really cost beneficial to you, if it's not saving you time, why adopt AI right now?
And then how leaders can avoid becoming the permanent auditor. So I want to slow down a little bit and ask for a principle that holds even as the technology changes. What is the single principle that you think a CTO should refuse to violate when making high stakes decisions under uncertainty, especially when everyone is pressuring them to move faster?
I think a CTO, if they don't feel like the product's ready and valid to be pushed to the public, they shouldn't do it because they're going to get blamed right away because that's their responsibility. And they're the expert in that field. They're dealing with legal issues. And I think a CTO who is responsible for the tech being prepared, being ready, and that it's valid and usable has to make sure it's usable. That's not going to default or have issues right away when it's released.
So basically, they should trust their gut and not be forced. Because I believe if I was a CEO and my CTO came to me and I said to my CTO, hey, this was a miserable failure. And he says, oh, you rushed me. I'm going to say, but you're the expert and you shouldn't have allowed me to rush you. Does that make sense?
Yes. And I think it goes back to principles and accountability. At the end of the day, when there's a problem or there's a failure, there's going to be people who are going to have to take accountability. And I think it's very difficult for companies that are in the public stock markets because they have to always keep on growing because you got shareholders, they have to get those quarterly earnings. And for startups, it's also difficult too, depending on their financial situation. If they don't have a lot of bandwidth in terms of finance, it's tough. It's better to be safe than sorry. Because if you're a CTO and you say the products can be released and you're not confident about it, you're going to be the first to blame. That's why it's important to know who's responsible for what, and communication is huge. We hear it all the time, but sometimes communication is not done properly, and it goes back to lack of responsiveness, and it goes back to respect too. Sometimes people are like, oh, it's not my problem. Why should I care? And that's not right, in my opinion.
So before we land the plane, why don't you let the viewers know where they can connect with you if they'd like to reach out?
They can check out my website at danielnikic.com or check me out on LinkedIn at, it's a pretty unique last name, Daniel Nikic. And I'm quite responsive. And if they go on my website, they can see the companies I work with and a background, and which leads to my company's website, Co Rez and Frontier Cover.
Thank you, Daniel, so much for being here today. I really appreciated your time.
Thank you and have a great day.
The core lesson here, though, is that auditability, it's not a personal virtue. It's a leadership system, and it prevents the CTO from becoming the bottleneck in lots of different ways. So if you're a senior technical leader and everything is still seems to come back to you, decisions, delivery, escalation, we build a quick diagnostic called the Firefighter CTO quiz, and it'll show you exactly where dependency is forming in your team and what to fix first. You can find that at the link in the description. And this has been another episode of Gaining the Technology Leadership Edge. We will see you again live next Friday at 10 a.m. Pacific.